Hey, great day, guys. In this video, I wanted to take the time to help you guys out who are just now finding real estate or, finally realizing real estate is something that you would like to get into, but you need to know the basics. We all start there. That's kind of the barrier to entry is you have to have the education to get into business and do it properly. In order to buy your own personal house, you got to know what you need to do, right? You got to know something about real estate, and that's what we're going to go over, okay? If you guys don't know who I am, my name is Sawan Lamar Belcher, okay? This is me taking action on Instagram, and I'm a full-time real estate investor, and today we're kind of in my house, okay? So I'm going to be doing a lot of videos here on my YouTube channel. So make sure that you subscribe, you like, and you comment about any questions that you have, because I'm gonna make sure you guys are able to go out and buy not your first, but your second, your 10th, 30th, 100th property if you like, and be able to maximize on it in an efficient fashion so you can make the most amount of money as quick as possible. Let's get into it. Real estate is such a broad term, okay? You just need to understand the exact basics of it all. Like, first of all, whenever you're looking at a property, okay, you have just like one house, okay? When you look online, you'll probably see the term SFH, okay? That's single family home, okay? And that's just your standard house, okay? Now that could, be a one bedroom house. It could go all the way up to 10 or 15 bedrooms, but that's one particular house. That's a single family dwelling, okay? Next, you'll see some houses that are like kind of connected, and they're 2 to 4 units. Now, those are they're multifamily, but the banks and the world, they don't really see that as being multifamily. They still consider that being single family, okay? And later on in the video, you're gonna see why that's a benefit to you if you consider buying one of those 2 to 4 units, okay? Now, if you see like a bunch of them together, maybe they're like stacked, there's like a first floor, there's a second floor, but they're all together and the walls are connected, okay? That's either gonna be a condo or a townhouse. So in those townhomes and condos, you're gonna find that you're responsible for the inside of it, and then there's some kind of like governor, typically an HOA. That's like a housing authority, right? So they're gonna be responsible for maintaining the outside of the unit, typically like the roof and maybe like the grounds and the parking lot area. But you as the homeowner, you're gonna be responsible for everything in the inside. And sometimes it's different. Sometimes you'll either pay the HOA directly with the water, okay? But most of the time, if not all the time, you'll be responsible for your electric and gas if you have those. Multifamily, okay? Multifamily is considered 5 doors or 5 units or more, okay? So single family, 1 house to 4 houses. Multifamily is 5 units or more. Now, you're never going to be able to get a loan that's considered a personal loan for 5 units or more, because to the banking world, 5 units is considered an investment property. Now, with these mortgages, okay, like I said, single family is going to be considered personal. Everything after 5 is going to be considered an investment property. Very, very, very important. Okay. Now, when you're looking at real estate to purchase, okay, most people are going to be, looking to get a loan. Okay. Most people aren't bringing cash. I mean, even if you do have $100,000, $200,000, $300,000 to bring cash, I don't really suggest it. Okay. And I'm just saying, because I've purchased 300 houses now, so I got to add it up exactly, but it's a little bit more than 300. So you can buy it in cash, but let's just look at some mortgage options, okay? So there's pretty much 4 basic kinds of mortgage. So number 1, there's an FHA loan that you can get. That's like a federal backed loan, by the government, Freddie and Fannie. Okay, there's a VA loan, Okay, so those are people who served in the military for some part of time, and those are like amazing loans. Okay, and then next you have USDA loans. Okay, you can get creative with those, and then after that you have a conventional loan. Those are pretty much your 4 basic loans that you're going to use to buy the property. Okay, so that way you can own and do whatever you like with. Okay, whether that's to rent out or whether that's to live in. Okay, now with FHA loans, you can get really good down payments. Okay, I mean, you can have like a 500 credit score and still get an FHA loan and put 10% down. Or if you just have above a 620, you can put 3.5% down and have your first house. I mean, do the math on that. Let's just say your medium price range is 175,000 in your area. 3.5% of that, I mean, that's like, you know, $9,000. Okay, that's really not bad. Next, once you get that loan to buy the house, inside of your loan payment, okay, inside of your loan payment is going to be a few different things inside of that one payment. Okay, it's going to be principal. A little portion of your monthly payment is going to go towards the principal to bring that balance down. Okay, and a little secret about an amortization. If you'll look at an amortization schedule, you pay more interest in the beginning of the loan and less at the end of it. Okay, so you want to make sure when you're buying a house that you have like a 5-year plan. If you not want to live there, if you don't want to have the property for 5 years, unless you're buying it with huge equity, you want to not buy that house. Okay, you're going to have interest that comes from that payment as well, because the bank wants to be paid back some interest. Your taxes will also be in that payment. So your property taxes, and then your insurance will also be inside of that payment. Now, your lender is going to want to have all of those inside of that one payment because it protects them from the government, essentially. Because if the taxes is not paid, then of course the city is not going to care who has a mortgage behind it. They're going to take that house and sell it so they can get their money. Okay, so most banks will put all of those in one, so that way they can protect themselves, from any kind of foreclosure and losing money. Okay, so when you're looking at what kind of payment, most of the time you're going to use like a payment calculator. Most of the time, the payment calculator does not include your taxes and insurance. So be sure when you're playing around with these calculators online that you be sure that you look and see what the taxes are. And now it's very easy to look and see what the taxes are on the property for the previous years. So let's do this together. Go to Google, put in your county. Okay, so for us it's Guilford County taxes, and you'll be able to pull up the taxes. It's public information, and you'll be able to see what last year and what the year before tax amount is, so that way you can put that inside of your budget. Okay, next you want to determine hey, look, is it an investment property? Should I rent it out? Should I lease it out? Those are like simultaneously like the same, a lease and a rent. Okay. Or am I going to live in it? Okay. And most of the time before you get a loan, you're going to establish that up front. Okay. Now, I did make a video on, how to get approved for a mortgage. So if you want to see that, I'm going to leave that link down in the description below so you can check that out. Okay. But next, you always want to make sure you buy right, even for your personal house. Okay. It is very important, in my opinion, more important that you buy a good deal, that you buy like an investor, even if you're buying to live in. Okay. Now, very simply, I'm going to tell you that my house here that we're sitting in today, it appraised recently for $250,000. I paid $119 for it. Okay, so that's a lot of equity. Okay, and just so you know what equity is the difference between how much you owe and how much is worth today, right now, as is, what you can sell it for today. And there's a lot of things that you can leverage with that equity. So I hope that helps you out with understanding some of the basics. Okay, and in the next video, if you'll just click right over here, I'm gonna talk to you about some tips and tricks that you can use, okay, to get approved and buy your first real estate property. Have an amazing day.